Welcome back to the Digital Asset Report. I'm Claudia Green from BitGo, and today we're diving into the latest news. President Donald Trump's crypto-focused initiative, World Liberty Financial, is making waves yet again. The company recently announced the creation of a strategic crypto reserve, signaling a major step towards institutional adoption of digital currencies. The news broke at the Ondo Finance Summit in New York, where WLF's Chase Harrow discussed the firm's expansion into tokenization and DeFi. The company has already been actively acquiring assets including Ondo, USDC, Ethereum, Wrapped Bitcoin, Aave, Chainlink, and TRX. On top of this, World Liberty is moving forward with plans to launch its own Layer 1 blockchain aimed at real-world asset tokenization. Institutional giants like Franklin Templeton, Google Cloud, and McKinsey have all already shown interest in this project. With political backing from the Trump family and growing institutional ties, World Liberty's crypto ambitions are setting the stage for shifts in the financial world. Also making waves in the financial world, last week, President Trump's Crypto and AI Czar David Sachs led a major press conference outlining the administration's commitment to ensuring American dominance in digital assets. Flanked by key congressional leaders, Sachs emphasized the importance of regulatory clarity and a pro-crypto legislative framework.
We're coming off, frankly, 4 years of arbitrary prosecution and persecution of crypto companies where the SEC wouldn't tell founders what the rules were, but then they would prosecute them. And many founders have even told me stories of being debanked personally just because they had founded a crypto company. All of this approach was driving this important technology of the future offshore, and we want to keep that innovation onshore in the US. Financial assets are destined to become digital, just like every analog industry has become digital. And we want that value creation to happen in the United States rather than giving it away to other countries. This will also, I should add, be much better for consumer protection because it's easier for regulators to supervise an activity when it's onshore. And it's probably not a coincidence that the single biggest fraud in the history of crypto, which was FTX, was based in the Bahamas.
During the conference, Sachs highlighted the anticipated strategic Bitcoin reserve, confirming that the administration's evaluating the concept. He also stressed that stablecoins could create trillions in demand for U.S. treasuries, reinforcing the dollar's dominance globally.
We're excited about working with both the House and Senate on stablecoin legislation. I know Senator Hagerty introduced a bill today. Stablecoins really have the potential to ensure American dollar dominance internationally, to increase the usage of the US dollar digitally as the world's reserve currency, and in the process create potentially trillions of dollars of demand for US treasuries, which could lower long-term interest rates.
Sachs also addressed concerns over crypto debanking and the need for consumer protection while fostering a thriving digital economy. With the administration's backing and bipartisan support, industry leaders are calling this the beginning of a golden age for digital assets in the United States. Over in Asia, Japan's Financial Services Agency is considering stricter disclosure rules for crypto assets. This move could mean that digital assets are classified similarly to securities, requiring businesses to be more transparent. A study group is currently reviewing the regulations, and final reforms are expected by June. If implemented, these changes could lead to digital asset ETFs in Japan, aligning digital assets with traditional financial markets. This development signals Japan's push to protect investors while still allowing room for crypto innovation. Meanwhile, on American soil, 19 U.S. states are now considering investing public funds into cryptocurrency, and North Carolina is the latest to join the list. A new bill proposes allocating up to 10% of state funds into Bitcoin, making it the only cryptocurrency currently eligible due to its market dominance. Speaker of the House Destin Hall is backing this effort, saying crypto investments could generate positive returns and help position North Carolina as a leader in tech innovation. While no state has yet fully implemented this strategy, both Wisconsin and Michigan have already added crypto to their retirement portfolios for public employees. And with 23 states now actively discussing crypto investments, the momentum is building across the country. Over in Europe, top fintech firm Klarna is officially stepping into crypto. CEO Sebastian Szemiakowski announced a move on X, saying, "I give up. Klarna and me will embrace crypto." The company, valued at $14.8 billion, has now over 85 million users and handles $100 billion in volume. While Klarna hasn't yet shared exactly how it will integrate crypto, this marks a major shift for the payments giant. In other news, an Alabama man has pleaded guilty to hacking the SEC's X account last year. You may recall how the hacker Eric Council Jr. used a SIM swap attack to post a false announcement that the SEC had approved Bitcoin ETFs when they had in fact not, causing BTC's price to spike over $1,000 prior to the formal announcement of approvals. Council now faces up to 5 years in prison for identity theft and fraud and has agreed to forfeit $50,000 in illicit earnings. This case is a reminder of the risks in the crypto space and the importance of cybersecurity, especially when major financial institutions are involved. That's the news for today. Thanks for watching. Be sure to give us a follow and head over to bitgo.com to learn more.